Boom. We are live, ladies and gentlemen. I hope you are having a fantastic time. Stick around for the whole episode today because we are going to be taking a look at Bitcoin and Ethereum. We're also going to take a look at XRP just for fun because you guys asked, and I think it's a good, just for amusement. We're going to quickly go over ontology, BAT, algo, Binance token, and quantum, as well as one as kind of a package, maybe even throw fetch in there just to take a look at certain areas of the regression lines and the backup phases. For those of you that know what that means, you'll be excited. For those of you that don't, make sure you stick around the end of the video so you can learn more. We're just going to go ahead and dive right in and start taking a look at Bitcoin's price. So I'm actually zoomed in a little closer here than I want to be. I like to usually go a little bit further out, and we're actually going to start on the weekly. And we're going to start with our original conjecture here by looking at Bitcoin on this much bigger chart. So for those of you that already know this channel, we are huge fans of the Wyckoff phasology method, which is basically the understanding of accumulation, distribution, as well as supply and demand. So we have our buying climax followed by our primary support, our selling climax, and our automatic rally. So we've been building this area and a position in Bitcoin for quite some time. And one of the things that I'm interested in is, well, there's two. Do we close above the weekly 21 moving average? This is a hugely important part. Or do we actually fall back down lower in Bitcoin and come up with a longer cycle in it itself? Now, I actually think that having Bitcoin somewhat stable, even within this trading range for longer, is healthy for the ecosystem, because right now, a lot of big money is interested in other areas of this sector. We're using Bitcoin as our money, very, I think, obvious and clearly dominant alpha for the new money of this ecosystem. But it doesn't mean that there's a lot of other cool things happening that can grow and change and build this. The DeFi sector, oracles like Chainlink, and just in general, the large scale execution of an accumulation period through almost everything, because when Compman plays, he shows up and he actually plays in everything. Again, he doesn't just bet on what he thinks he knows is going to win. He bets on everything knowing that he can't get it right every time, so he gets it right in aggregate. So recently we've started to switch over and just chart Ethereum, because when we're looking at Bitcoin, there's enough weak hands in here for me to think potentially we could have a much lower LPS, even though this test range is quite high. Now that might not happen, but either way, there's enough weak hands in this from the religious community of Bitcoin that I'm not all that, I don't want to count on that. Whereas with Ethereum here, wow, this is a much, much more exciting chart to be looking at. So here I have Ethereum open on the weekly, and I'll actually zoom in on the daily so we have a little bit more recognition of where we are in this accumulation pattern. So again, buying climax, selling climax right here, automatic rally, spring, and then the growth out through box D. So more importantly, what I want to go over today is this backup phase, because there are a bunch of different tokens that are in this, and what we're looking to do is measure relative strength and timing so that we can take advantage of as many of these explosive possibilities and opportunities as they come. Just like we saw with Tron, build up into phase D, a breakout, close the position, and look for something else that's ready to make more capital. So I think that there is room to come to this bottom regression line, but I do believe very concisely that we're going to see a sideways trading range like this that ends up building into a jump across the creek, a final kind of SOS, and then a real big breakout. Now, I want to go over this reaccumulation period because it's what this backup phase looks like, I think, quite often. This is stock charts we're looking at now. So here we have your like BCLX, your automatic rally, your secondary test, and then this change and then this resistance. So this is what I see effectively happening in Ethereum right now, that we see that BCLX, so the PCY, BCLX, AR, ST, which will probably shoot us back up to around $436 within the next week, I would imagine. Like quite quickly, it'll jump through this regression line. It'll come down here and it'll do this build. It might even jump against the resistance one more before actually making it across the creek, seeing another the real SOS this time, and then bang. It may go quicker, But this is a really big mover, and I think the more stable that they can get it, the more time the big whales have to accumulate it. And I think that they know, I think a lot of them know at least, that once they start to go and move on something with limited supply like this, it's going to run, and we could see as high as $3,000 Ethereum based off some of the retrogressive charts that we were looking at in last episodes, which would put you approximately out this way if we followed the same parallel. And again, you could also measure this with your Fibonacci retracement tools by effectively measuring the height of the box. Measuring the height of your previous all-time high to the bottom of the box. That's like this. Yeah, so it's around your 1618 of that, maybe a little higher. Something like this, around 21 to 2700 pretty easily, I think. Not right away, but over the coming months, year. These types of bull markets move in through sequences of up and down rallies, the beginning of which is the slowest, which is the accumulation. The markup usually comes in two phases. Markups that we've been looking at after the buying climax come down into a selling climax, an accumulation. They shoot up, they do their first 100%, maybe this is, let's call it a wave. They get into wave 4 basically. They go sideways, which is becoming the reaccumulation, which is often why wave 4s look so awkward. And they shoot up one more time, and then you get final distribution before, let's say, a reaccumulation phase that happens back here later, higher than this previous accumulation. But this markup and distribution are extremely important parts and events to take account to. So as we look at some of the other thesis that we were going over, what we wanted to do was take a look at, let's start with BAT because it's right there. Now BAT's been a little bit slower at this particular return. It's gotten stuck right above its first regression line, and it's closing. Excuse me, I'm just not even going to edit that out. Just excuse me, ladies and gentlemen, bless me. Closing above the 9-day moving average. I do suspect we're going to jump very quickly back up to this third or fourth regression line up at the 21-day moving average. We might consolidate in here before seeing a full SOS, a backup, and then a breakout. So it's really important to keep an eye on these changes, because this micro or mini SOS shot us through the box and then came all the way back down to the bottom of the regression channel. Right, so with Binance token, this has been a play we've been really excited about. We built our entries all the way through the test here because I'm a big believer in what they're doing in their decentralized world, and I believe that their community will be able to pivot and adapt quite nicely. So we are following these regression lines up, and it spiked through the box on the first line. So I think that we're likely going to see this is going to be like a micro SOS. And it'll come back to the progression line here. You'll see a real SOS and then a massive breakout somewhere into December, January, February. So they'll let go. People will be calmed down after the elections and da-da-da. But either way, I'm going to be building very heavily into the final LPS and backup phases for Binance token. Not financial advice, but I have watched the pool of this company play around, and they are very professional at what they do. Their market makers are well on point, and we've seen this in similar plays like Fetch and One. So for those of you that have been in the private bear family for quite some time, congratulations, thank you. But you would remember that we've been looking at Fetch for quite a long time. We actually took some of these nice runs up in waves here because we knew we were hitting selling climaxes, and we got some great gains. But even more importantly, we started to enter Fetch at the spring, and we got massive gains out of this initial D phase. Now, what we're witnessing here, I think, is where the comparative analysis point comes into play. Do we get a micro SOS and then a failure back down to the regression line, or do we actually turn around here with Fetch and take off into a full backup phase explosion? So now we look at One, which is one of the favorites of the bear family. This is right up alongside, and this is what I mean by getting to learn your pool or your composite operator. This, I think, what we're witnessing is the same comp man that's playing in Binance, because they act very similarly and they're very well coordinated. If you go up to this top right hand corner, we're going to pick two charts, and I'm going to show you the similarities between One and Fetch here, and hopefully they'll be easy to see. Let's put it on the weekly so it becomes very prominent for both of these charts. Excuse me, on the daily. Thank you guys for being so patient while I figured out what it is I even want to show you. Okay, so here we have fetch and fetch. Obviously, they look the same, so let's make sure I get this right. Fetch and 1. So here we have, as you can see, automatic rally in the exact same spot. First ST, same spot. Second ST, same spot. Spike, same spot. Look at this rally, almost identical. And then look at the breakdown, almost identical. So Harmony and Fetch have the same composite operator. Well, that's a nifty thing, isn't it? Because look who else has the same composite operator. Oh, look at CELR. Look at that, CELR. Automatic rally, secondary test, spike, same spot, exactly the same spot. And look at this rally up, and look at the rally down. So when what we're doing is trying to find a comparative analysis, we want to be able to actually tell if we're following the same composite operator. I believe that the composite operator that's playing in Fetch is playing in Binance. Well, that would make sense, wouldn't it? Because Binance was the launch pad for Fetch. But they would have a vested interest in it. Their market makers would have a vested interest in it. Not only that, they would know the very open supply that was left, and they'd know that they could chew it up and mark the price up massively into this next bull run with very little effort. And they will. That's what composite operators do. They signal the selling of their shares of their next new cool thing by marking the price up because they have the capital to do so. You just want to make sure you're on the right side of that trade when it comes to fruition. So what we're doing with this accumulation and distribution method is we're trying to identify the different pools or composite operators, the whales, whatever you'd like to call them. I think CompMan is like the best way to go. Just envision it as just one single individual. But it's very clear that they're not. They're actually separate individuals, and you can get to know them kind of almost how they work. Because when we saw Tron's phase, Tron was a beautiful, perfect rendition of another composite operator built accumulation zone. SOS, backup, bang, smash, kaboom, right? Beautiful play. And that's what we're looking to find. So when I look at Binance, and I actually compare Binance versus Fetch, what we see is almost an inverse correlation. Near the tops of both Binance and both Matic CELR 1 and Fetch was right here. As soon as they dipped down, Binance token started to go up. I think the composite pool that's operating in this sector is going to shoot this one up. It's going to bring it back down. It's going to shoot the others up while it regresses, and then it's going to do it again. And it's going to get Binance token above this longer green channel and regression line, a very important one because it represents a multi-year trend line for this token. They're going into DeFi, big moves coming from Binance. Very undervalued at $20 as far as I'm concerned. Not investment advice, but I've been building my position in here since the test. And again, what's important about this, guys, is when we go into this comparative analysis, if we can find the same pools, you want to start to learn to trade in one pool or another potentially, because you can become even better at recognizing what they do, how they work, when they work. You know, what if your composite operator is always doing it? Well, you're asleep. Well, that might not be as fun, right? You don't get to see half of it. So one of the interesting things here is that a big part of this thesis for each of you that are learning how to do this is observation. More than it is trading, it should be the desire to observe, the desire to identify each one of these accumulation zones unto themselves, and then the way the whales and wake of those whales are made in these little tiny ecosystems. Because it's important, if you want to use it to your advantage, to understand which direction and when they go so that you can be on board for that ride. Now, I want to interlude here by saying that, look, things like accumulation and distribution are as age-old as the cloud, but they don't always work out identically, right? There's no set one-size-fits-all. So when you're dealing with risk management, you as an individual need to find out what you would be afraid or not afraid to lose, right? I can lose maybe $10,000 or $20,000 in a night, and I won't lose sleep over it. You might lose $10,000 or $20,000 of sleep overnight and be shaky and cold and sweating in bed. So the difference here is a personal one, and it's a relationship with capital up or down, the excitement or the regret, let's call it that. Neither are that important. the fun, I think. The one thing you should be interested in is, if you are, is can you build a strategy around a thesis and follow it through? And to your own best decisions, make those choices with the information that you have, instead of making emotional decisions like, oh, I'm just never going below $10,000 again. Mike Portnoy, retail trader, buys at the top, gets distributed on by the bigger fish. Well, that sounds like a retail trader move. What do you mean you've been trading for how long and you still haven't figured that out either? Or are you just being stupid because it's fun? Well, maybe the latter, but I doubt it. So part of the question is, do you want to learn how to follow the large market operators, or do you inevitably want to become a retail trader? Retail traders can do well, but they're not paying attention to the larger market cycles because they don't have enough money to do so. But you don't need that much money to actually do so. You can skip having $100 million and just be able to observe what people with that much money do to markets like this and the way they act. When news gets released, Binance price gets smashed down 5 hours before the news gets released. And then as soon as the news is released, the price is already on its way up. CompMan already dropped the price to the floor 4 hours before the news came out. As the news was coming out, it was already on a recovery as CompMan bought up all that last week Canon supply. And it looks like, oh, look, yeah, Binance token went up because of the news. No. Binance token was going up because Composite Operator was playing in that space, and he released the news. He knew what was coming. The people who had been buying and accumulating all the supply of Tron, they knew that this announcement was coming, and they built into it. So you need to understand that the comp man, he builds and creates the news. He runs that sector himself too. They're very talented at this game, and they've played it many times. And what's exciting about this is we didn't see this in early 2017 so well defined. It was in Bitcoin, but not in the rest of the sector. The rest of the sector has that footprint now. It is extremely exciting because the next run we go on could be a wild, wild ride. Now, again, back to the beginning of the thesis. I'm not a big fan of what Bitcoin is doing with some of the religiosity, so I'm not going to use it as it's my alpha, but I'm not using it as my market indicator. My market indicator is currently Ethereum. It's just giving me beautiful market signals, and I feel very strongly that it's going to do exactly what I think it's going to do. Now, still, I'm going to have a stop loss here, but I'm going to be going in nice and heavy right around this area over the next little while with Ethereum. Maybe we see a crazy wick spike down, but it's something you would never even see on the weekly candle. Like if you put on the weekly chart, you'd never even be able to tell that there was that chaos. Like here we are right above the 9. Like, oh, boom, here we go. I think we'll shoot up to the top. We'll come back down. We'll touch the 21. We'll build along, and then we'll break out very calmly right to December, October, November. Oh, elections. See, the price didn't know. This is just how CompMan has built his position already. Right? The pandemic caused the spring. No one was planning for that. Nobody planned for that. Universal consciousness and human nature seem to interact like this every time, and there's nobody in charge. Think about that. 100 years, this thing has been going on and repeating itself, and nobody's in charge of that. It's human nature we're charting. So, I'm going to go over lastly XRP. Not because I like it. I actually think it's kind of garbage, but I also don't care anymore. I realized I don't care anymore. If they're giving me good signals to buy, I'll get in. But XRP isn't giving me a good signal yet. Here, let's take a look at it. Let's go through and chart this one for all the newbie learners about Wyckoff. So here we go. We're gonna scroll back. We're gonna give us the weekly here, because what you want to start off by identifying is actually the primary buying climax. So there it was. Here was the buying climax. Boom, hypodermic top, distribution, boom, primary support, selling climax. Okay, so let's zoom in and take a look at what that looks like on the closer chart, right? So we can really get into the minutia and kind of finish this one off, just to help everyone learn at the same time here. So we're going to go up here. We're going to add our T. We've got our primary support. Oh, it's not a PD, a primary debort. No, primary support. There we go. That's an S, T-ho. Now we could argue that it's here. You could, but I feel that it's here. This volume bar is quite nice, but let's put it here. It's probably up here. But you could look at it as here too. So we'll put it here. It's just closer to in the box. If it's out of the box like this, we can ignore it and say, okay, this is the new primary support, followed by the selling climax. This is like the height of the volume. followed by our automatic rally, which is the shoot up into the top of the trading range. And this is where the box gets defined. It gets defined by your trading range, gets defined by your automatic rally and your selling climax. You then have your first secondary test, or supply test is what I like to call it, followed by another supply test, and then your spring. Now the spring here in phase C is usually often accommodated by something going bad in the world, war, rumors of war, pandemics, tornadoes, hurricanes, floods, all that. For some reason, human consciousness seems to have this moment where things go wrong, and then that lines up with markets, and then it creates the rest of the cycle. So remember, guys, this isn't like comp man is actually in control necessarily. Like he is as the godhead, but these pool makers are not in control. They just are able to take advantage of it. You know, what the hardest thing to do is probably recognize that one of the things you're going to do wrong as an individual is when the pandemic starts, you're going to sell because you're going to get scared. But the reason why they say buy when the streets are bloody is for a literal reason. You almost have to turn a switch of a part of your brain on to be a killer in this moment. To think to yourself, oh, there's a pandemic. Great. What are you going to do? I'm going to buy distressed assets, ladies and gentlemen. And that's what we were doing in May and June with tokens like Fetch into a beautiful 300% run. But here we're looking at XRP. It's big, it's clunky, it's been around for a long time. We also know that we have a lot of retail traders in it, so it could be very sporadic, and I'm not a big fan of that. We already went over that. I don't like that from Bitcoin, right? But here, let's draw it out just for fun. So here we can assume that there'll be an LPS, and they do this. They do this regardless of if the token's any good or not. They market man, like, remember again, composite market man, the guy who doesn't exist actually, but is like the godhead of trading somehow, hidden in consciousness itself through human nature, is this unique design that shows up every time over 100 years later after it was first found. It's still exactly the same. That's pretty fascinating to me. So I wanted to go over this because one of you guys have asked. It'd be something like this: LPS, SOS, backup, and here. So you'd have your regression line most likely coming like this. We'll say, you know, just to kind of get an idea of what it looks like before. Well, what happened if we were way back here? We saw a big automatic rally. Would we have thought that was the test? No, it's too short. It's too short of a time frame. You're talking about 219 days. Now, this is normally at least a year. Right? And that's what we've discovered with Ethereum. And this is what I try to remind everyone, is that when you want to learn this type of stuff, you have to have the patience for a market cycle in both directions. Let's say from selling climax to where we are today is 651 days, 648 days, right? Very long. That's a long time to recognize a market cycle. But here's the fun thing too, is that you can actually get much more minute about it. You can go, oh, look, after that primary support into the selling climax, we had the top of a box and a backup and a breakout, right? So here's your selling climax, your automatic rally, your spring, and a rising gradient bottom, just like we had looked over before. Very powerful idea right there, right? And a rising gradient top through the box itself into the backup phase. Very explosive into Ethereum this moment would have been, had I known exactly what I was looking for like I do now, right? Here's an accumulation range, but on a smaller time frame. They do exist. This does work in a fractal nature, but it's not this. This, on the other hand, ladies and gentlemen, is where you get a real move. This is where the fun is at. This is still fun too, right? Nothing to scoff at 100%. This whole box is almost 80%, right? None of this is to scoff at if you can get into low and sell to high, right? But this moment where you break out of the regression and you start to go past some of the previous areas of resistance and support through the previous buying climax, woo-wee, that's a fun ride. So keep your eyes on that. Thank you all for everyone that joined the private group. So much great feedback. You guys are loving it. I'm loving that you love it. Thank you. If you didn't get your welcome emails for some reason, there's probably like 10 of you I know that I just missed. We're sending out our first new educational PDF because we've done more before this, but this one's like crystal clear. You'll get that, and then you'll get all the other links as well, because you'll definitely be included. There's just a mix up with the automation and the emails because I'm kind of not all that good at like Active Campaign or whatever it's called. Anyways, none of you guys, you don't care about that. So if you haven't joined, remember you can join, and it's a no questions asked money back guaranteed. So what's the risk? There is no risk. It's less than money. That's probably less money than you'd lose on most trades. So if you want to try it, just take the risk, because there is no risk. If you're not happy, we just give you an instantaneous refund. It's the first thing I do. Don't ask you why. I just say, great. Is there anything we could do better? That's all I want to know. So this is Tea with the Arcane Bear. Thank you guys for all the support. It's crazy to see how well this is growing, to Lindley, to Robert, to Glasswalker, to all the Kodiaks, Leah helping out, Jerry Bear, everyone in the Bear family right now. Thank you guys for being so supportive and such a strong community to work and build with. It means so much to me. This is the end of the video, so I'm sorry for that, because I know that we all wish this could. This is the song that never ends. Yes, it goes on and on, my friend. Yes, some people started thinking, not knowing what it was, and they'll continue and forever, just because this is the song that never ends.